Well, hi traders, and I hope you had a great weekend. Let's talk about natural gas. A couple of things in the news, one big one actually, but looking across at natural gas world, natural gas intel, there's not an awful lot. Interesting article here though on natural gas world. Most Americans favor natural gas, and Karen Harbert, president of the American Gas Association, says US politicians are getting on side with voters who prefer gas as the means of cooling in their homes on hot summer days and heating them during cold winter weather. And quite an interesting article. And there's a little sentence here that says 25 states have passed legislation prohibiting the banning of natural gas use. Really interesting. So that's half the country and more than half the throughput of natural gas. Policymakers, based on their input from constituents and voters, have spoken. Better listen. There are other states that are considering the same thing. So putting a ban on or prohibiting the ban of natural gas. Interesting. There are a couple of other things in the news. Two things, really. Natural gas futures sputter as late August heat underwhelms. Cash down too. A lack of intimidating heat heading into the August undercut natural gas futures on Friday, sending prices lower. To cap off a largely bearish week of trading, adding to the series of daily losses in recent sessions, the September NYMEX contract dropped 7 cents to settle at 2.55 and so on. So, yeah, a bit of a bearish week, but we'll have a look at the charts shortly. But perhaps the most interesting thing, and I'm going across to my Bloomberg account. Now, I pay for this so that you don't have to. This is what Bloomberg says, and well, you see it all over CNN and the news. California braces for a catastrophic flooding from hurricane, and this is Hurricane Hilary with 1L. Transportation, sporting events moved as Hilary approaches. Mexico expects floods and dangerous surge from storm. So I don't know what effect this is going to have on natural gas. We've dropped from a category 3 to category 1, so that's better news, I suppose. Winds of 110 miles an hour, making it a category 1 hurricane on the 5-step Saffir-Simpson scale, and the storm's moving towards Baja, I think you say it, Baja, Mexico's Baja, California on Sunday, but winds are expected to weaken. Now, whether this is going to cause disruption in power lines and supplies and just general usage and demand on natural gas, I don't know. Some of you involved in this sort of thing who know how much gas is used in California for cooling. And actually the weather's been pretty mediocre, so probably there isn't as much demand on natural gas, and therefore the effect of this hurricane won't be as severe. Just switching back to this article, natural gas futures sputter as late August heat underwhelms. So if there's not much demand anyway, because there hasn't been much late August heat, maybe the hurricane won't have as much an effect on demand as might be otherwise. I don't know. For those of you who are involved in and know how much gas is used in cooling in California, etc., perhaps you can leave some comments below. So that's all the news, really. And then going across to the Bloomberg Energy page, there's some of the quotes and the prices, and then the headlines down here. California braces for catastrophic flooding from hurricane, and nothing else much on there. The only other bit of news is the strike in Australia, and whether that's going to take place or has taken place. I don't have any news on that right now. Perhaps if you know something more about that, you can also leave a comment below, but that might prop up the price of natural gas. All of that having been said, let's go and have a look at the charts. And first of all, let's have a look at the day chart, and this is the NYMEX price on Henry Hub. And if we just zoom in, you can see I've divided this chart into two sections. There's this yellow section, which is this new range that we've formed above $2.50, and then this red section is the range below $2.50. And as long as we're holding above that level there, we're pretty bullish on natural gas. You can see on Friday we just fell down and we just touched that upward rising trend line. I could just drag this down a little bit, so we've kind of just touched it right there, the bottom of this channel, but we are below the 50 and the 20-day moving average, which is a bit of a concern, and the 200-day moving average is way above us up here at about $3.50. So looking pretty bearish, I suppose, on the weekly chart, but we're still holding above this channel line, and we're still holding above $2.45. So my position is $2.66 long, my average price, and I have a hedge order of an equal size below at $2.43. That's just below this red division line between the bullish and the bearish ranges. So there's the channel on the 4-hour chart, and you can see these reversal green spots here above that line at $2.45, and that's the top bullish range or the new range above $2.45. And then we've got the range below $2.45 between $2.45 and $2, actually $1.97 or $1.98. On Friday we fell down to the 78.6% Fibonacci level. We held above it for a long time on Friday. In fact, it was only the last two 4-hour candles on Friday that were below that 78.6% level. And the very last candle on Friday was actually a bullish reversal candle, and we have not fallen beneath this spike low doji reversal candle that took place 2 candles prior to that earlier in the day on Friday. So far, this doesn't look particularly good, I have to say, and it doesn't look very bullish. But we haven't broken beneath this doji candle. We're still holding above the lower channel line, and we're still well above $2.45, which is the sort of division between the bullish and the bearish ranges, or the new $2.45 to $3 range and the old $2.45 to $2 range. We're still holding in the upper part of this overall move, and we're within the rising upward channel, and we're just at around about that 78.6% Fibonacci, although we did close fractionally below it. So that's all I can really add to this situation on natural gas, and whether this hurricane in California is going to cause us to gap down and put downward pressure on the prices or not, I don't know. And whether the strike or proposed strike, whether it's gone ahead or not, I don't know, in Australia is going to put upward pressure on the prices, and whether technical pressure and the overall potentially bullish nature of the natural gas price is going to keep pushing prices higher, I don't know. We'll have to wait and see. I suspect if there's very bad news from this hurricane in California and the strike in Australia doesn't go ahead or is delayed or cancelled for whatever reason, that we might see a gap down and we could test this 245 level, or slightly higher than that at around about 250. And it is possible that we could break down below 245 back into this lower range between $2 and 245. Let's hope that doesn't happen if you're a natural gas bull like I am. But if it does happen, you need to be prepared for it. And in my case, I have a hedge at 243, and I'm prepared to hedge my entire position and then wait and see what happens thereafter. Well, I hope you found that useful, and I'm sorry if you're a natural gas bull that I can't bring further enlightenment or hope to this position. But if you do enjoy this and you want to see further updates as we go forward, please subscribe to the channel, give us a thumbs up, and I'll see you in the next video.